ABC Bullion 360 2020 wrapped up. My name is Crystal Thibios and I am joined by Global General Manager at ABC Bullion, Nicholas Trappell. We heard the word unprecedented, describing everything from natural disasters to the COVID pandemic to global politics. And I'm challenging Nick to try and describe 2020 and summarize it and see whether unprecedented also applied to our precious metal movements. So Nick, let's start way back from the top in Q1. What was the sentiment for precious metals?
Thank you, Crystal. Yeah, it seems really hard to sort of remember that far back. It's like another world. But sentiment, I think, was really good. And the reason why was because if you look at, say, positioning on the CME, the COMEX, it was over 25 million ounces for managed money longs. So people were definitely sort of in the frame they're positive about gold. We had Chinese New Year around the corner. We had a little bit of news about COVID, but it was really sort of, probably being ignored in many ways. We had good technical action on both Aussie dollar gold and US dollar gold. It was holding above the weekly turning and standard lines. So lots of stuff looked good. And also real interest rates as proxied by inflation-linked bonds, those yields were going sort of through zero at the time, and particularly then, more so then compared to now, correlations between gold and real interest rates were really strong. So the whole setup looked good,
Nice. And then February, March hit, and it became apparent that COVID-19 was definitely out of control and a worldwide issue.
Yes.
How did the precious metals market respond to this?
Well, gold was made a high in March of 1703. Dropped down to 1451 very quickly. It was a huge move, The really important thing was it pretty much touched the weekly cloud top, which should have been good support, and it was really good support. And then the price turned around and it made the onwards climb up to the August high. Other markets, S&P 500 dropped 35%. Bonds just went through an incredible sort of move, and then subsequently went down, the yields went down again. US unemployment, just looking at some of the numbers now, just incredible, going from, sort of 5 million to 23 million. Just really sort of obviously life-changing and world-changing event.
Yeah, completely shocking.
Absolutely.
Yeah. In Q2, we saw the price of crude drop dramatically.
Yes.
How did the precious metals market respond to that?
Well, there were two things going on, and what's really interesting is how both of gold and crude, well, in particular West Texas Intermediate, because it had a sort of a localized effect that was to do with conditions in America. They both did quite similar things, but they were doing them in their own sort of separate space. Now, WTI, West Texas Intermediate, has storage farm big storage facilities down in Cushing in Oklahoma, and it's compared to the total volume of crude that's traded and flowing around North America, that storage space is actually pretty limited. So what happened was one of the impacts of COVID was to cut demand for energy, and And what happened was, as demand sort of went from the end user to the terminal market, crude basically had to flow into this limited space, and storage was bid through the roof. You couldn't find storage. So if you were long of the front month with crude, you either had to get rid of it to somebody, or you had to find storage, pay for storage. And what that meant was that as it went into delivery, I think we got a sort of a $30 discount of the, which was absolutely amazing. And some people did really well, some people did really badly. It's just a function of this limited storage space, and what's ultimately a flow market where the flows are huge, the storage isn't. On the gold front, it kind of did the same thing, although it didn't go into a discount on the near side. What it just had was the curve went up, so the futures lifted, and that wasn't a storage issue, of course, because there's no real issue around storing gold. The issue was, like I referred to earlier, it was more about what if we need to get gold to that final market and not wanting to be short. But they both kind of look similar, coming at it from different ways. I think the thing that's really, really important about it and really interesting is that things do happen again in history in maybe different ways. They say that history doesn't repeat, but it does rhyme. And what I think is most of us will never see, or very unlikely to see, something like that in crude and gold again in our lifetimes.
Okay.
I would be surprised if we did.
Awesome. In August of this year, we saw the highest gold price in history.
Yes.
How did the rest of the market respond to that?
Well, what's interesting about sort of gold going to that sort of 2074 level on spot was that it was a new high. Actually, a lot of metal had been flowing into the ETFs, so there was genuine investor flows that was underpinning that. From the COMEX and the futures point of view, the US futures point of view, if you looked at it on a sort of a macro level, metal was flowing out, and there's a couple of reasons for that. I think partly the volatility around the premium over gold and where it was moving around so much. It was probably quite a rough ride for some investors and margining and so on. Pretty naturally, because the price was so high, actually a lot of gold was being sold.
Yeah.
So demand in Asian countries, that high price would have attracted a lot of gold out of the market anyway. A lot of people were holding on to gold. You were seeing initially the US dollar rallied, but then it dropped again. You were seeing people saying, okay, we've got gold, let's just sort of pump it back into the market. So in fact, although the price was high and it looked great, there was sort of an outflow of gold. And one of the other reasons for this secondary selling was that because of COVID, a lot of jewelry demand really, really got hit hard. So I think, without sort of going through every country, sort of China, India, Thailand, all of these places saw massive reductions in Q2 for jewelry demand. And that just meant they had either big stocks of gold or they just weren't buying it.
So it was a good time to sell. Yeah.
It was a good time to sell, yes. It was something that it was always a question between sort of 2000 and 2100 where it was going to stop.
Yeah.
I think if we talked about it at the time, a lot of people, a lot of banks, a lot of analysts were saying gold can go to 2300 by the end of the year. There was probably a little bit of euphoria. I think at the time we had targets on our charts that were certainly looking at 2350, but interestingly some of them actually stopped or had targets that went to about 2070, and then there was this big gap until the next range of targets. Okay. So that sort of suggested where the gold price should go, but of course in the heat of the moment you sort of think, oh okay, that's just another target, but it was quite a key one,
Yeah. So in Q4 we saw the price of gold and silver steadily decline from that point. But we did see strong support, especially for gold at that US 1763 mark.
Yes.
What was really happening in the market?
Dollar was going through really, really interesting times because it was kept on holding on to the top of a really long-term trend line and also the base of a monthly Ichimoku cloud. And it kept on bouncing up, and as it bounced up, it was giving gold a hard time because the correlation between the dollar and gold is running pretty well at the moment relative to, say, earlier in the year. But eventually the dollar broke down. Broad dollar index broke down through that support, and of course we've seen gold rally pretty well. Stocks have also been doing really well, and obviously that's been, sort of competition with gold, if you like. One of the reasons for that is because I think there's been a rotation away from some of the tech stocks, which had incredibly high valuations, more towards value stocks. And looking ahead, obviously with all of the monetary and fiscal sort of boosts that have been going on this year, which have been huge, the equity market seems to be taking a really, really positive view about life in 2021. I think the question about that is that the data we're getting is, suggests actually life in 2021 might not be as good as the stock market thinks. So there's that dichotomy between whether the stock market's got it right and whether valuations are fair for 2021, whether actually Q1, Q2 of next year, especially in America where the virus is ripping through, are we actually going to see, a challenge to those valuations?
Awesome, thank you so much for your insights, Nick. It looks like we're in for an interesting opening to 2021.
Yeah, I think so. And one thing I'm really looking forward to is when we do in January, I think we're planning to do that 2021 outlook as a special. So hopefully that'll be illuminating and interesting.
Oh, good. I'm sure everyone's looking forward to it. Thank you so much for tuning in to ABC Bullion 360 throughout the year and for all your support. For more, please follow us on our socials below or subscribe to our YouTube channel. Merry Christmas and Happy New Year. Until next time, thank you.